Hello and welcome to the Decrypting Crypto podcast. It is April 24th, 2025, and this is Off-Chain, your weekly recap of the biggest stories in the crypto space. I'm Matthew Howells-Barby, and with a slightly new look on our video today, and with Austin Knight. How you doing, Austin?
Good. We've taken an upgrade, Matt. We're coming to you in full video color. I love it.
Chef kiss. It's beautiful. It's really beautiful. Well, we've got a few things that we're going to be talking through. You know, we missed last week. The week prior, though, was when we were talking pretty heavily around all the different stuff going on with tariffs. Not sure if you've heard of tariffs that have been going on, Austin.
Oh, yeah.
And quite a lot of macro. We're going to talk a tiny bit about some macro, but it's going to be a lot more crypto focused this time out. But I thought I would start with the first story because I think the past 2 days we've seen, and I want to be very cautious with how carried away I get here, a little bit of market optimism. I'm less optimistic that this is going to persist, but it seems like some of the softened language around China and, you know, dethroning Jay Powell has softened the market back up a little bit. And we've seen crypto lead the charge there. So on Tuesday, we started to see crypto really start to rally prior to the market open on on Monday night. We started to see it rally a little bit ahead of the market open on Tuesday, and then things really started to take off. But something that happened yesterday, I don't know if you caught this, Austin, was Trump sent out a truth. I still don't know what we call it, but I just love saying that he sent out a truth, or he truthed. He announced that the top 220 holders of Trump, the token, will be invited to a private dinner with him. Now, I was in the Kraken Slack and I saw this come up, and I immediately checked on the chart for Trump, and the hourly wick was just crazy. It was up 50% in just off that simple announcement, surpassing around $14. I'm just going to check in on the price action now because it retraced a little bit. Yeah, it's up about 31% now. It's at $12.30 as I speak. So it was the biggest gainer of the larger cap tokens yesterday. The interesting piece in this was the dinner itself, which is set to take place on May 22nd, which is at Trump's private National Golf Club in DC. They also mentioned the top 25 holders would be welcomed for a reception, a special VIP tour of the White House, which was kind of surprising to me, but clearly it drove a ton of short-term, at least, interest. What I bring up the fact that this came up in the Kraken Slack because something that I thought was very funny is we were looking at the top holders, and of course, being an exchange, Kraken holds a lot, and we were the 14th
Oh my
largest
God, are
holder.
you going to the dinner, Matt?
We're taking Kraken. The whole company. Not only that, we're in the top 25. We're getting the full VIP tour of the White House. But I thought that was quite funny. Many jokes were made in our Slack around that one. But it clearly made an impact. I think much of this. I think we were looking at the time. This was around the time of the announcement. I think to break the top 220, you needed to own around about, I think it was $350,000 worth of Trump. So it kind of, I think it was clever, the amount, because it's attainable for someone that really wanted to and that has some funds there to go big. But most people are just going to be riding the rally. So we'll see what happens. I anticipate there'll be more things like this that Trump will throw out, which we're pretty accustomed to. I don't know if you remember when he did that thing with his NFTs where he like cut off a piece of his suit and that he was like going to give out to. I think we covered that in the podcast. God knows when that was, like 2023, something like that. So
Always
I expect more stuff. Oh yeah, I mean it clearly worked, and he knew when to do it.
But Trump wasn't the only coin that took some gains, right?
No,
we did see that like overall the broader crypto market took a gain of about 1.2%, bringing its total market cap up to like $2.65 trillion now. Substantial. Bitcoin was roughly in that territory, right? Around 1.8% gains. Solana and Ripple took bigger gains, though, 10% and 4.2% respectively. Something I thought was interesting was to see that ETH, Cardano, and Dogecoin took a little bit of a decline, a little less than 2%. But some altcoins like Decred and Compound surged with gains of 11%,
I think
9%.
When you look at as an eternal ETH bag holder, nothing surprises me that ETH declined.
Yeah, it's so true.
But when you actually look at the 7-day, ETH follows pretty similar to BTC, actually. I think BTC and ETH on the 7-day are up about 10%, which is also kind of close to in line with Solana, Cardano, and co. It looks like the things are now just slightly pulling back, nothing too crazy. I haven't checked the S&P right now and what some of the equity markets are doing, but the futures were kind of flat. So let's have a little look here. No, actually, starting off strong on the equities open, actually, especially across tech. So we'll see how that plays out.
Yeah, it's been interesting though just to see like that immediate impact that Trump's announcement on pulling back potentially on the China tariffs and not seeking to fire Jerome Powell.
This I think is the real news, right? Is like, okay, Trump token to one side. If we actually take a step back, why did crypto surge overall? And by the way, crypto surge, but the equity markets, the S&P has had a fantastic week. And so we kind of came in from the weekend of Trump talking, allegedly consulting how he could remove Jay Powell as the Fed chair, and markets did not like that at all. Some big words about China at the end of last week. And then he kind of really did a complete U-turn all on the same day. I think this was on Tuesday, where he kind of said, no, look, I've got no plans to replace Jay Powell. That is not what I'm looking to do at all. And he also was like, I think his verbatim words were that he was going to be kind to China, that they were going to come to a deal. The tariffs were not going to stay high. They were going to be, he even said the tariffs were too high right now, and they're of course going to come down. So it was very interesting. And after that, the S&P had very strong 48 hours, same as the Nasdaq, and actually all of the European and UK indices had really strong weeks as well. BTC
and the volatility index took a plunge too.
Yes. And with that as well, we talked about BTC. It surpassed 94K yesterday. It felt like yesterday it was at 73K. So it's really nice to be closer up to that 100K. But I guess, a week is a long year in crypto. What I thought was interesting was that gold retraced from its high of 2,600 down to 2,450 at the same time that everything else was surging. So you're kind of looking at that and you're like, we talked on our last podcast episode what about like the real concern was that US assets, the flight to safety no longer felt safe. We talked about the longer term notes, the treasury bills, and the 10-year and the 30-year, the yields spiraling out of control, dollar strength continuing through weakness in people jumping into the USD. Well, while this happened, the 10-year treasury yield actually dropped to 4.27 from about, I think it was about 4.4. So, and then it settled back at around 4.34, and we're actually still seeing that come down. So then you're also saying, okay, maybe there is a flight to safety in the US. But then, at the exact same time, dollar went the completely other way with the Dixie increasing, which means, dollar was strengthening, something that you wouldn't anticipate, not quite what the Trump admin would want. So there's all kinds of stuff happening, and we had what maybe not everyone finds interesting, but I found quite interesting, was the latest 5-year treasury note auction, which happened yesterday. Why is this important? Well, we want to understand like what the appetite is for buying treasuries. And the last one that we had in March was pretty weak, and everyone was very worried about it. In particular, people were worried that in this one, the big foreign buyers, the indirect buyers, would either be too skittish and not have less of an appetite for US denominated assets, or could even, in protest, not buy some of these assets. Well, that didn't really turn out to be the case. Bid to cover was really solid at 2.41. And the yield itself came in lower than expected, which is a signal of strong demand. But the most important thing is the foreign buyers, so the indirect buyers, showed up in force. It was about 64, just over 64% of all of the bids in the auction came from foreign buyers. So that was a pretty good overall outcome. Not like crazy bullish, but much better than certainly what I thought and what I think the market thought. So we're seeing little things happening here. I think I didn't see all the details, but it looks like there's a lot of talks with Vietnam happening right now as well about trade deals. And I don't want to be too optimistic, Austin, because it's the hope that kills you. But it feels like slowly in parts here, there's a path to getting away from some of this chaos. I don't think this is going to last.
You've got Vance meeting with Modi in India, working on a special potential trade agreement there as well, which, depending on how you view that is either something that could truly come to fruition, or it's something that is a negotiation tactic with China, or maybe it's both. But I think that, so I was Googling like how long it takes for trade agreements historically to be completed in the United States. And the shortest, I want to say the shortest trade agreement ever was something like 6 months. The fourth shortest was 2 years. We're a couple months into this. Some trade agreements, go into the like 1 to 2 decade range.
I saw that. I was listening to Bloomberg this morning, the Bloomberg podcast, and that was one of the first things they said about China was like, a bullish outcome is to get an actual fully fledged trade deal with China would be like a 3-year time horizon.
Yeah, I think so. So we're at the very beginning of this, and I think that that's the expectation that you should have as an investor going forward.
And I just don't think that anyone's going to make big moves while we're in this 90-day pause window, right? Because we've seen this already with the last pause. Was that one was with the China-Mexico stuff, and we thought, it's going to pause and it's just never going to happen again. Then it was just like, all right, we're back, let's go. And so I think like everyone's waiting to see how that plays out. Obviously, a lot of pressure on the Fed to reduce rates. I think that Jay Powell is taking the right approach in not doing anything too early until he sees how all of this plays out. And I think, yeah, maybe we could get into June before we see a rate cut. But we'll see. But I think there's the macro stuff to one side. I think this is going to continue. We're going to have these moments. I'm almost certain BTC is going to, range in the 80s again over the next few weeks at some point, and then maybe we jump past 100K, maybe we retrace. I think it's going to be a lot of sideways chop for a while.
Yeah.
But there is a lot of, in the background, really bullish kind of things happening on the BTC side. And you had a story that we were going to talk a little bit around one of the new Bitcoin investment vehicles that has just been set up, right?
Yeah, so Cantor Fitzgerald and a handful of partners have launched a $3.6 billion Bitcoin investment firm. It's a big number. They have partnered with Tether, Bitfinex, and SoftBank to form something called 21 Capital, which is just a Bitcoin-focused investment firm. And they're starting out by purchasing 42,000 Bitcoins. That's where we get that $3.6 billion number from. And yeah, think about this, Matt. That is a huge holding. That would actually make them the third largest corporate holder of Bitcoin globally.
Wow.
So this is a big player entering the scene.
It's basically another strategy, right? This is MicroStrategy V2.
I think it's like a MicroStrategy V2 with a few really interesting differentiators.
Okay.
In some ways, they are definitely aiming to emulate MicroStrategy's model because they're focusing on Bitcoin accumulation, of course, and they're including some Bitcoin native metrics to measure their success, like BPS, or Bitcoin per share, and BRR, which is the Bitcoin return rate. So they're trying to measure performance in Bitcoin terms instead of in dollar terms. It looks like they're also going to raise some additional capital, about $585 million through convertible bonds and equity financing, so that they can purchase more Bitcoin and also pay for some general corporate expenses. And they're going to go public via a reverse merger with Cantor Equity Partners, which is a SPAC. And they'll trade on the NASDAQ under the ticker symbol XXI. They've also got Jack Mallers, who is the CEO of Strike. He's going to be the co-founder and CEO of 21 Capital.
I thought that was pretty interesting, having Mallers come over. Obviously a very big name inside the crypto space, kind of be leading the charge on this. But I think this marks... No, it doesn't mark, actually. This is a continuation of a trend that's happening where we're seeing, and we talked about this prior to Trump coming in, right? Because we had SARB 121 legislation that, the Trump administration has helped break down, that has made it a lot easier now for corporations to hold cryptocurrency on their balance sheet. But we have Strategy, obviously have been doing this for a long time, but there's also been, ETH investment vehicles set up just like this that are doing basically, the ETH version of MicroStrategy, and even more so, several Solana focused ones as well. Nowhere near this scale, but I think we're just going to see more and more of this. But what's maybe we can give a little background on some of the firms here that have actually kind of formed together in this.
So this is where I think it starts to get interesting. Just in case you're not familiar with Cantor Fitzgerald, they're a fairly old, founded in 1945, global financial services firm that's headquartered in New York City. They focus on all of the typical stuff: investment banking, capital markets, real estate, infrastructure investments, prime brokerage, fintech. And that makes them one of the largest interdealer bond trading firms in the world. You may have recalled, if you were around and old enough at the time, that they specifically suffered really heavy losses during the 9/11 attacks. They lost nearly 70% of their workforce in the World Trade Center collapse. But they've since rebuilt and diversified, and they've become a pretty major player in financial innovation and SPACs. You may hear that a lot, a SPAC. It's a special purpose acquisition company.
Is it 2021 again?
I know.
Running it back. Chamath is going to love this.
Yes, I did want to get into that because there is, I think, this perception that SPACs are scammy. And I think that they've earned this scammy reputation. But this particular case might not be one of those scammy SPACs. If you don't know what a SPAC is, it's essentially a blank check company that raises money from investors and then merges with a private company to take it public, thus bypassing the traditional IPO process. Some red flags that you would typically see with a scammy PAC could include unknown founders, maybe pre-revenue startups, vague promises and projections, very retail heavy pump. These always seem to get a lot of hype built up around them. Some green flags that you might see could include really reputable backers. And in the case of this, we have Cantor, SoftBank. Those are pretty well-known entities. Another green flag, companies with hard assets, something like maybe 42,000 Bitcoin. A transparent thesis, like just focusing on Bitcoin accumulation. And then also an institutional backing and a pretty clear business model. So I think that, like, even though they're planning to go to market as a SPAC, that I don't think that's necessarily inherently a bad thing about this development. Yeah. I also think that something that's really significant about this is that it marks a continuation, if not escalation, to your point, Matt, of old Wall Street meeting with crypto. You've got a legacy financial firm here with deep roots in traditional finance entering the crypto space with backing from SoftBank, Tether, et cetera. And they're doing it at scale with $3.6 billion becoming the third largest corporate holder of Bitcoin. They're going to be on the public markets with their SPAC, and they're going to measure their success in Bitcoin, not dollars. All of those things, I think, are fairly significant about this. And it immediately brings me to this question of, like, okay, in that case, like, what is the difference between XXI, as 21 Capital will be traded, and MicroStrategy? So because they've immediately been compared to MicroStrategy. Well, the XXI SPAC is purpose-built as a Bitcoin native financial company. That's like all that they do. They don't have any other business lines. As we know, MicroStrategy was originally a software company that pivoted to become a Bitcoin treasury play. And so they still run their small software business, although I know that there's a lot of speculation that they're going to continue to sort of wind that down. MicroStrategy holds over 190,000 Bitcoin at this point with plans to buy more, whereas XXI is starting with just over 42,000 Bitcoin. But I think that something that's important here is that MicroStrategy is run by Michael Saylor, who holds significant voting control. Whereas XXI is backed by Tether, SoftBank, Bitfinex, Jack Mallers, their CEO, Cantor Fitzgerald. Yeah. There's a lot of major entities at play here, which then brings you to potentially another question, which is, what would be the difference between investing in XXI on the public market versus buying into a Bitcoin ETF? And I think that the key difference here is that last piece that I mentioned, which is that with an XXI SPAC, you're investing in a Bitcoin native operating company, not just pure Bitcoin exposure. You're also looking at its growth strategy, its leadership, its business model, and that is where it's similar to MicroStrategy. Whereas with the Bitcoin ETF, you're buying into a passive financial product that mirrors the price of Bitcoin. So there's no active strategy, no business behind it. You're not, making a bet on Jack Mallers or on SoftBank or Cantor Fitzgerald.
Yeah, and I think, like, undoubtedly, the comparison is often going to be, certainly in the public markets, does XXI, does MSTR outperform BTC, right? If they don't, I think that's not a good look, because that is going to be the option from a shareholder perspective, I think. Now, obviously, being a huge holder of BTC opens up lots of additional revenue stream opportunities through largely lending, custodying, etc., which is what Strategy does a whole lot of and generates substantial yield on their BTC. It's what they report on consecutively. I think over time we'll see more and more use cases for these. I really enjoy that they are trying to be Bitcoin native, and even the way they think about their metrics is very interesting. We are going to see an explosion of these, whether it be via SPAC or via strategic acquisitions. We actually had some former Kraken guys that I know really well. They acquired a company called Yanova on the public market, and basically that was, I think, a software business, but then they just stripped out the software business and repositioned it as a Solana investment company. So we'll see more and more of this happen, and it seems to be the playbook is, you issue notes to raise capital, you use that capital to invest and build out this treasury, you generate yield on the treasury, and so the flywheel continues. It's going to be, I imagine what we will see soon as well, no doubt, is probably an ETF based on an index of a lot of these different companies, right? And so I think there's going to be lots of different variants on them. But I think it's interesting. What I think is particularly interesting in the view of BTC is Bitcoin dominance right now. Anyone in crypto that they've probably been waiting for and continuing to wait for, altcoin season. We do this every cycle, so I don't want to get too carried away. It's similar as the decoupling of BTC against equities, which I started hearing again a couple of days ago, and now everyone's gone quiet, which is like BTC dominance is here, and it's going to outperform everything. There's going to be no altcoin season. I don't subscribe to that at all, actually. I think we will continue to see trends of the past. It's undeniable, though, right now that BTC dominance is on an absolute tear. And when you look at all of the things at play right now, all of these different, obviously, like the ETFs already, and a lot of the institutional buyers, a lot of the ability for corporations to just simply hold BTC on their balance sheet as a treasury asset, and all of these vehicles being set up and purpose-built investment firms, it's pretty bullish Bitcoin. If you're already bullish crypto, and it's not a question of will crypto perform, it's, I think, harder than ever to make a choice outside of Bitcoin right now. It feels like the narrative is the strongest it's ever been from a pure price perspective. So I feel pretty bullish on BTC in general for the tail end of this year and going into next year, assuming massive macro asterisk next to that, of course. Yeah,
absolutely. Well, speaking of scams, not scams, one final thing that I wanted to mention here is that the FBI just released a report that Americans lost $9.3 billion to crypto scams in 2024, which was a 66% increase from 2023. We mentioned that this move with Cantor Fitzgerald and many other large institutional investors entering the crypto market is a sign of the positive regulatory environment, and I think that that's very true. I think also the sheer amount of scams that we still see in this space, and certainly that we saw last year, granted prior to the current administration, nevertheless, also indicates a continued need for smart regulation and regulatory clarity here. So keep your wits about you out there.
I'm glad we always end on a happy note as well, Austin.
I had to throw it in.
I can always rely on you for that. I mean, I miss the days when the happy note was often talking about Sam Bankman-Fried, but that ship has long sailed. Until the pardoning happens, we'll have to stick to hacks. Anyway, it's been a pleasure, as always, Austin, and I'll see you next week.
Talk to you then, Matt.